Greetings, Dr. Jeffrey Scott here, and this is my special uh, video on tools for top-down trading. This is to show you the different tools I have in the different trading systems out there. Um, I'm going to review how I use the tools, and it's pretty generic. And frankly, you can probably build some of these yourself. I think the benefit is they're already done for you. But I want to talk about how I trade, how I use these tools to find great stocks, and where I look to find them, what industry groups and sectors. Again, my name is Jeffrey Scott, and my email address, as you can see there, is hgsidoc@gmail.com. There are so many great programs out there. If you look at my desktop, you'll see I have lots of different programs. I'm not a programmer. I'm a doctor. I'm a healthcare entrepreneur, I guess, and this is a bobblehead doll that somebody did for me. When you do big deals, you get some kind of the bankers give you something, and they gave us plaques, but they also gave us bobblehead dolls of the leadership team, which my grandkids have managed to break all of them except for the last one I'm holding on to. So let's go forward. And I am independent. It's one thing I need you to know. I use a lot of tools. No one pays me to use their tools. In fact, just like you, I subscribe and pay to WealthCharts and other services as well. So am I without bias? No, I'm not without bias, but I'm certainly not being paid to be biased. So when I get to my tool section, they're offered for final purchase only and are enabled for lifetime use. That means you pay for them once. If I do a major upgrade, and I think we've done a major upgrade on TradingView, I might charge an upgrade fee. But any small feature improvements, fixing glitches or problems, if the underlying platform changes and I have to change things, those will be provided free for lifetime, whatever that means. Long time, I hope. Trading has many variables. There's no implied or suggested performance guarantees with the use of any of these other systems. My goal is to find stocks like NVIDIA, SMCI, Lilly before they go on to their big runs. And I think my tools can help you do that. I guess the best proof of that is to my free videos. Every week I put something out on YouTube. Most days I put something out on stocksanddocs.com. And I go out there and tell you what I'm looking at. Doesn't mean I buy them, doesn't mean you should buy them, but it gives you a sense of what my tools find and how I use the tools. Trading involves risk, and before you trade, you should always consult your investment advisors. I have bought almost every tool on the market. Nothing comes out of the box and makes you a millionaire. There's a learning curve. You need to practice, whether it's with paper accounts or only money you're willing to lose, until you consistently make money. Market environments can be challenging. I think we're about to enter a challenging one. From November on, it was darts. Everything did well for several months. No tools will work in all markets, and past performance does not always predict the future. Now I got that out of the way, let's have some fun. So that is a picture of me before Mounjaro. Mounjaro is one of these GLP-1s that have caused stocks like Novo Nordisk and Lilly to go crazy, and also a lot of these small cap biotechs have been hot because they've had similar drug being developed. I get to speak at the Wealth 365, which is such a pleasure because I don't have an education company. I do this for fun. I do this to give back. And so I don't have a big mailing list. However, Rob Hoffman allows me to speak at his quarterly Wealth 365 events. He's built some of my tools in at no extra cost in WealthCharts. He's built a scanner that is one of the best in the market for my stuff, and I'm thrilled to be part of their group. The next one's coming up for July 15th to 20th. I'm going to put the link in the remarks section on YouTube if you have a chance and you have interest in attending. Even if you're not sure you can do it, just please use my link. They actually track how many people sign up, and I'm never going to do well on the signups because I don't send out to 5,000 people. Only the ones that capture me on YouTube or follow me in other ways. I mentioned stocksanddocs.com. It's the name of my new boat, but it's also the name of my daily site. This is something I do with the folks at becomeabettertrader.com. They don't control the commentary. They basically give me a site, and that site I send them a video in the morning, and typically at 8:30 o'clock in the morning, 9 o'clock, it gets posted on the East Coast before the market opens. I do a couple of live meetings a year. This one is already booked. It's for June 6th. Actually, the meeting starts the 7th, the 8th, and the 9th. We do it in Tustin, California, which is real close to Orange County Airport. Um, I think we're filling up in the live meeting, but I'll talk about the online event that we're doing as well. It's not an expensive meeting. It's now $400 is the final price. I can tell you that in addition to what's listed here, and Dave McMullen is a questionable, and hopefully he'll attend live or on Zoom. He's just a brilliant trader. Dev Keshov is also a great trader. He's a shorter term trader than I. We find a lot of the same stocks. I love listening to him talk, and he does his own seminar. So he comes to this program and gives you a taste of what he does. Chris White is the proprietor of EdgeRater. EdgeRater is a tool that I use to generate some of the data that I use on my weekly updates and nightly, and recently incorporated some more cool stuff as well. Not on that list, but so happy to announce that John Person, personsplanet.com, a good friend of mine, much better golfer than I. We went golfing yesterday in the 90-degree heat with his lovely wife Mary. He will speak on Friday morning. He's a great trader. He's going to come in at 12 o'clock Eastern Time, speak for an hour and a half. And then Sagar Nandi will join us from Thailand, the Q tools expert who is going to show us his tools for top-down investing. Everybody that presents, certainly Sagar and I will have some tools at great discounts at the meeting. So Thursday we have a meet and greet. It's usually a very small thing. People just sit around the hotel lobby and chat. Friday, you can see 12 hours with a break for lunch. Saturday, another long day for me. And then Sunday, we do a meet, greet, breakfast, and look at charts and whatever we didn't cover at Dave Larson's house. The Friday, Saturday, and Sunday will all be broadcast on YouTube. I try and record every session so that after the meeting I'll create a Dropbox. In that Dropbox I'll put the videos as well as the PDFs of the presentation. So even if you miss some of the sessions, you can get caught up. If you have interest in attending, you can stop the video and write these down. Greg Mills or David Larson, it's really their meeting. I just get to do a lot of the talking. I mentioned internet, so I've started this. Contact me at htsidoc@gmail.com for registration. Now, typically, I do multiple post-meeting Zooms to cover things that I didn't get enough time. Everybody calls them the AMA Ask Me Anything session, so I'm going to leave it at that. And you'll get discounts on my packages, and Sagar's package, and he requires Metastock, which most people don't have for data source. So I've convinced them to give us a nice discount to try out his stuff as well. So hopefully with the discounts on packages, the meeting is free. And since those discounts are not offered broadly, certainly my stuff, I never offer discounts except when I give live talks. It's a great way to, frankly, get free education. So talk about my tools. Now this is a combination of my approach to trading and my tools. It'll be a little bit of education, and then I'll show you how I use these three platforms with my tool sets to make my life easy and hopefully to make some money. Remember, past performance don't predict the future, and this is education, not promise. My tools are in WealthCharts, TradeStation, and TradingView. HGSI, www.highgrowthstock.com. You can do a lot of this as well. It's a platform that I use. Actually, it's really sweet when it comes to industry and sector analysis. But my specific tools and scanners are in these three programs. Asterisk scanner is not in TradingView. They're plugins. They require the third-party tool. Now, WealthCharts just launched something new at the last quarter meeting, which would have been in March or April rather, and it's called Jumpstart, where you can actually buy my tools and they will work fine, but you don't have to pay for the program, but you also get a skinny down version that's just enough to run the tool set. I'm going to talk about my thoughts on each of these as we go forward. So which set is right for you? In my opinion, the charting aspects of TradingView are probably the best. I think TradingView, because of their cheap data, their access to crypto, futures, Forex, as well as US and international stocks is great. And I've got the deepest penetration of my different tools is in TradingView. However, TradingView does, although it's got a new version of its scanner, I can't do in their scanner what I can do in WealthCharts and TradeStation. So that is a big hole there. WealthCharts is a great platform, and I guess what I'm missing here, which is the reason to buy TradeStation, is Radar Screen, which is only available on TradeStation. All of them have value. All of them have my dots and my EMS. All of them have my red candle low, green candle high, not green candle low, high low oscillator, red candle high, green candle low, high low oscillator. So most of them have the same tools. And then the other thing that is really awesome on TradingView is their fundamentals. And they're probably somewhere in TradeStation, but you'll see how I use them in TradingView. So there's a lot of positive things about each platform, and I'm going to go deeper into that as we go. So I am a top-down trader. I am also the breadwinner for a family, as many of you are, and I am of age. So do I have 10, 20, 30 more years? Probably not 30. And when I pass, I want to pass a legacy on, and I want my grandkids to be, have wealth as well. So to me, it's about preserving capital and growing at the same time. And this is a game. In the US, we called it chutes and ladders. In England, they called it snakes and ladders. And probably my biggest influence on my trading life is a guy named Ian Woodward. And whenever you see these three little triangles in the white shield, that's Ian's symbol. Ian's been gone now for several years, and he gave me permission to use this before he passed. In the game of chutes and ladders and snakes and ladders, you roll the dice, you move up, and imagine you're playing your best friend, you're 9 years old, you hit 28, and the goal is to get to 100, and the ladder takes you right up to 84. Well, that's a bull market. That's buying Nvidia 3 years ago and holding on. That is the greatest thing that can happen to your wealth. And then you roll the dice and you hit 3, and you hit the snake's head, and you go all the way back to 24. That's a bear market. And I remember in my early days of trading, before I understood money management, I could pick stocks, but I didn't know what to do with them. I kept coming back to 24. Well, at the age of 40, that's probably okay. At the age of 66, I can't afford that, and most of you can't either. So preserving capital matters. Don't play chutes and ladders or snakes and ladders with your retirement money. So I'm a top-down trader. I'm a swing to position. I use daily and weekly charts for the most part. Indicators and scans are important to me. However, let's think about what they are. Everything's based on price and volume and time. Price and volume and time. So I could name them anything I want. I could come up with fancy names, but it's still based on price and volume and time. Different time frames. There's so many different things you could do. I use indicators to help me find the points where I want to look at a chart and make a decision based upon the pattern. I use scans to find the times that the indicators are telling me I have a setup. I use my eyes, and I look at price and volume. I look at support and resistance, and I look at changes in control from the bears to the bulls to help me make my decisions. The indicators and the scans help me find the stocks to look at. I'll trade equities, but one way I found to protect my capital is to put less of it at risk. And one way to do that is leverage on options. And so I do a lot of equity options. So I'm looking for stocks in uptrends. I pull back to support. I buy momentum off support. I have rules-based position sizing and stop management, extremely important. And seasonality, positive seasonality is a good thing. And then in medicine, it's see one, do one, teach one. And so I try and teach all the time, whether it's weekend or weekly videos, mini mentorship, and live meetings. Look, I've been very successful in multiple aspects of my life. You know, I won the lottery when it came to picking a wife. Imagine meeting a girl on a Thursday and proposing to her on Saturday 2 days later, and waking up with her 40 years later and still being, every day is a great day with her. I mean, well, I got lucky there. I don't count on being lucky in the market, so there's been a lot of education, a lot of time, and a lot of investment to get to where I'm at. I like to give back, and so you'll find that the only things that I charge for are these indicators. Why? Because I had somebody else build them. And the deal I have with them is they build them, I help them perfect them, and we split the revenue. And there are three different people that are developers, so each of the different packages are unrelated. Now, why do I like top down? Why do I care what the market does? Why do I spend so much time on my YouTube videos on the markets? Because one thing I learned is pushing things uphill doesn't work. You want the wind at your back. You want the markets to be going up when you're long. You want the markets to be going down when you're short. I am not a counter trend trader. I don't want to pick up little victories in a downtrend by going long, because that's not where the big money is made. The big money being made is being a trend trader. So Ian had this group in sunny Palos Verdes, California. They would meet every month. They would pick stocks that they liked. These were growth stock investors. I got to go occasionally. Living and practicing medicine at the time in Atlanta was a long hike from Palos Verdes, California. What they found when they looked back, in this retrospectively, that's the key word. Retrospectively, they graded the markets. Was it strong? Was it weak? And then was it in between strong, in between weak? And what they found that when the markets were strong, their stock picks went up. They doubled in a month, 20 days trading up 106%. In a weak market, the same people picking stocks the same way sucked. And you could see that it was the market, not the pickers, that mattered. The other thing is, if you get a big win, it's going to revert to the mean. So on stocks that get a big move very quickly, take profits. Doesn't mean sell them all, take profits. And if you're in a weak market, don't hold on thinking it's going to get better. That's probably the two most important points there, or 3 points. Strong markets make us all look like geniuses. Take profits when you get them, at least partially profits. And in weak markets, don't hold on thinking it's going to get better tomorrow. Now, Stan Weinstein's got this great book, Secrets for Profiting in Bull and Bear Markets, and he came up with stages, and I think this is a very important aspect of trading, whether you're a day trader, swing trader, position trader, every stock, every index sector, everything goes through the same pattern. I want to be buying in stage 2. I want to be out of the market or shorting in stage 4. A lot of the times we're just going sideways. And, it's not horrible to be holding a stock in stage 1 or stage 3 if it pays a dividend. But why would you want to be in a stock that's going nowhere and you don't know when it's going to change that doesn't pay a dividend? So I want to find this right here when the stock is coming out of a stage 1 base. I'll even be happy with this and with this. I want to be out of the market somewhere when this breaks down. So I actually have a tool set that I built off of Weinstein's stage analysis that I could scan for stocks that are turning into stage 2 or turning into stage 4. So you can ask yourself, what stage are we in right now in the S&P 500? I would kind of argue that even though we're at all-time highs, we're probably sitting here in stage 3. Now, turns out markets don't really do this. If you're in an uptrend, you go stage 1, stage 2, stage 3, and then you go back into stage 2. So I don't know if what we're in the spiders is just a pause to refresh on the way to higher highs. It might be. Or are we about to roll over and go into stage 4? Same thing happens in a downtrend. You come down and you start to base here and you're thinking it's a stage 1 and you go back into stage 2. But no, it's a stage 1, a pause to refresh, and you go further. But the ultimate pattern repeats itself over and over again. So let me introduce you to my first indicator. This is probably one of the few indicators I'm going to show you that I actually was part of a group that created. Ian gave us a challenge. Go find me a tool that can show trends. So, like I said, some of these you can probably build yourself. A bongo is a combination of price and Wilder RSI. To turn a buy signal, price has to close above the 9-day or 9 period, because it could be a weekly chart, smooth moving average. And then the RSI, 8-period RSI, has to be above the 14, above the 19. The first day that both of those occur on the same day, I turn to a buy. I'll stay in a buy until the opposite occurs. They both occur at the same day, close below the 9, and a flip of the RSI. Unless both of these are met, it stays in a signal. Okay? This to me becomes a quick filter that I could identify in multiple time frames. If a stock or a market is in an uptrend, chopping, or a downtrend. Now, one of my buddies, Dave S., used this as a timing system for ETFs, and he was a money manager. It's not the fastest, but you'll see the bongo will get you into an uptrend and keep you there and get you out before much damage is done. That's what I wanted it for. Turns out I can do even more with it. Here's the bongo on TradingView, just as an example. And notice down here you've got 3 colors, and you've got a daily, a weekly, and a monthly. Notice that in a long-term downtrend, the monthly stayed red the whole time. As we started to have little retracements in a downtrend, the daily and sometimes the weekly would actually turn green, but the major trend is still down, the monthly. So by scanning for certain characteristics, we might be able to identify pullbacks and uptrends or retracements and downtrends. And I use this on indices, sectors, groups, individual stocks, and ETFs. Now, I mentioned the Weinstein model, so I wanted to figure out, could I combine some of my tools and give me a way of scanning for stocks in the various stages? Well, I look at trend status, and here's your consolidation, whether it's a stage 1 base or stage 3 topping, uptrends and downtrends. And in a strong uptrend, both the weekly bongo and the daily bongo is long. In a downtrend that's strong, the weekly bongo is short and the daily bongo is short. If I'm looking for a pullback in an uptrend, I'm going to look for the weekly bongo to stay long, and I'm going to look for a flip from short to long on the daily. If I'm looking for a retracement in a downtrend, so going back into a stage 4, stage 4 downtrend, the weekly bongo short, and I just flip from long to short on the daily bongo. So I'm going to combine that with a WMA, a weighted moving average, and welcome to my build your own simple market timing system. So what I've done here, and this is in WealthCharts, is, and we'll go into the market real time because this is a couple months old, the picture. I've basically plotted a weekly chart with a WMA and the bongo. When price goes above the WMA and the bongo is green, that's a buy signal. It stays in that buy signal until both of them price closes on a weekly bar below the WMA and the bongo turns red. This will keep you in most uptrends. You could see it got you in back in May of 2023, and except for a small period of a pullback, you've been in the whole time on the S&P. You could see the same model in TradingView. So this stuff is built for you. I share the layouts, the indicators, and they're things that I use every day to help me extract my benefits out of the stock market. Now, you might say, man, this is so simple. How could this actually work? Well, remember I said the bongo doesn't get you in right away. It's a little bit late and it doesn't get you out really early. However, no one says you have to wait to get the signal. It's more to keep you in. So if you look at 2002 to 2003, we broke below the WMA and our bongo turned red. And remember, both have to flip at the same time for you to switch the market. You would have been out of the market almost the entire downtrend, and then you would have gotten back in April and rode the uptrend. Same thing with 2008, 2009. We got out up here. Okay? We got back in here. Yeah, we missed the very low, but this is capital preservation. We avoided most of the kill. 2018, 2019, this was the one that got better at Christmas time. Look at this. Closed below with a red bongo. You were out of the market for most of this. Now, if you knew it was going to bounce back so fast, you could have stayed in. But you got back in, you stayed in for quite some time. And then what about 2020, the flash crash? How could this even work? It was so fast. Same thing. Broke down here. You avoided some of the mess. And then if you just waited until you got back in here, you rode a big uptrend. Now, I don't necessarily wait. I take this down to a daily time frame. And if all the daily indexes have flipped as well early, I will start to dabble. But when I'm in this mode of price above the WMA with a green bongo, I know it's time to put money to work. A lot of money. I supplement with breath tools. Someone reached out this weekend and asked about the Hindenburg on the NASDAQ, and where do I find it? The Hindenburg Omen is an old wives' tale. Just because it's an old wives' tale does not mean it doesn't work. I'm going to show you some data about the Hindenburg Omen. The buckets, we're probably not going to go in. I do that mostly on EdgeRater and the Q-Edge tools. Simple. Take a look at the S&P 1500, how many stocks are above or below their midline, and then break each 10% of the percent B, call those buckets, and how many stocks are in each of those buckets. And why is that important? It gives you a sense of where the market is sitting, bullish or bearish, and if you're above the Bollinger Band or below, what percent, and those could give you signs of a reversal coming. I like AD lines and divergences. Right now, there's still a significant divergence between the NASDAQ composite and the AD line on the NASDAQ composite. New high, new lows. Markets go up, they make lots of new highs. If you see leaders breaking out and there's still mostly new lows, I'd be suspect. And then what about stocks in relationship to their moving average roll-up? And I'll show you some of that as we go forward. So it's not just my market timing, but the market timing is a critical part of my analysis. So what about the Hindenburg Omen, as taught by my mentor, Ian Woodward? There are a number of components. Notice it's the NYSE. This is automated at EdgeRater. I've also built it into TradingView and into TradeStation, at least on the NYSE. One of the challenges with this Omen is the results may be different a day or two across different platforms. And I think part of the problem is the components of the NYSE. The NYSE's got a lot of bond funds. It's got preferred shares. You got to take out all that stuff and just look at the NYSE Common. The other problem I have is the markets have changed a lot, and now we have all this technology which is in the NASDAQ. So there are ways to get around that. So this is a historic look. This was something that Ian created up to 2005 when we were had the signal fire in 2005, and you could see that every time it fired there was a decline, and about 6 of the time it was a pretty significant decline. It's not, you need a confirmed, which is 31 days I think after the first signal to get a second signal to confirm it. Now in 2007 I was sitting in India, took some customers on a visit to our revenue cycle management business in Chennai, and I was looking at these things coming in here, and Ian had taught us about them. It's like, do I believe in these Hindenburg omens? It's an old wives' tale. I didn't do much in 2007 when this happened, and this was in the July, and boy did the market sell off. Oops. But markets have a tendency to come back. And then this is a daily chart, and look at how many Hindenburg omens we saw here in 2007, November. And we all know what happened. We had the black swan in 2008. So they are real. I think that they're meaningful. And when they're confirmed, here you have 2018, and the market sold off. Here was a little one in 2018. Here was another one in 2018. They're not all big booms, but they can signal a market top. 2021 going into 2022, looking at the NASDAQ composite, I started seeing all these Hindenburg omens, and it was enough to make me get nervous. Now the Hindenburg omen, I first looked at it using Edge Radar on the NASDAQ. When I saw this, I had to ask my question, does this even mean anything? It's not the NYSE. So I've started looking at this and going back, and I think it does mean something. And this was going into May, end of April of 2024. The Alfred E. Newman character used to be what me worry. I'm a little worried about the markets here. You hear that on my my videos. Doesn't mean I've gotten out of the markets, but I've raised cash. These are weekly charts, and it shows you we've had 17 daily bars fire. Now, it'll be interesting to see what happens here with the Hindenburg omen, but it's enough to make me pay attention. And you could see 2020, 21, 22, 24, the Hindenburgs fired before the market rolled over in 21, 22. What's going to happen here? What are leading sectors and industry groups? All right, if you're going to go fishing, you want to fish from a pond that has lots of fish. I think the ultimate platform for this was HGSI, is HGSI, www.highgrowthstock.com. Yes, I still use it. Yes, my email address is a takeoff on that product because I've been around that product forever. But you can do this in other programs as well. I applaud Rob Hoffman because he has incorporated a similar system where I could start with sectors and drive to industry groups, and from the industry groups get the stocks, and from the stocks drill down to look at the charts. That's what top-down investing is, and I think as an all-in-one package, WealthCharts is as good or better than anything in the market, and probably because of Rob, his involvement in the platform, his time he spends teaching in the platform, Ziad, Lori, and others he's brought in, Dr. Keith Wade, to do some of the teaching, has really made it a unique platform. And there's little you cannot do with this platform. Is it perfect? No platform is perfect. And I do supplement it with the breath tools from elsewhere and some of the sorry about that. It's not even a trading day, but it's 9:30 here. But I do supplement it with the breath tools and the fundamentals from other places. Now, what really changed my life was when Rob put this into a scanner for me. But before I get to the scanner, let's talk about the indicators that I use. Again, I'm a simple guy. When I learned how to be a doctor and go through medical school, and then you're an intern, even though I'm a cancer doctor, I'm an internist first. And as an internist, I had to learn how to read an EKG. And what is an EKG? An EKG is electrical impulses that we pick up on a piece of paper by sticking electrodes on your chest, your arms, your legs, and they give us insight into what your heart doing. I like to think of my dots indicator as an EKG for your stocks. Here is a strip. I put the bongo on top here. I usually have it on the bottom. When the bongo is green, it tells me during this time frame we're in an uptrend. That's what it tells me. In this time frame, we're in a downtrend. So it gives me a single time frame trending. Yes, if you buy my packages, you can have 3 time frames on the same chart in each of the three platforms. Then my dots, I have an extra dot or two on TradeStation, but my main dots are gap, volume, breakouts, and momentum. All right, and how many of those dots fire? I can tell you I'm interested right here in this stock. Why? Because it just reversed trend. It's got big volume breakout momentum coming out of a squeeze. The next one is a PSAR, a Wells Wilder system. I just put it in there because I think it supports the rest of the model. And then the red dots are red candle highs, and the green dots are green candle lows. So I'm able to use this stuff, whether it's showing me pullbacks to support, change in direction, or my impulses to know what's going on with a stock chart without even having to look at a chart. So again, gaps. This is based on some of the work of Gil Morales, Chris Catcher, the O'Neill disciples. Great books to read. These can be big winners based on gap size and volume. I filter those out that finish in the lower, below the middle on my charts because I want them to finish in the upper half. Big volume, volume equals conviction. I look at current volume versus past volume over a defined period. I'm looking at unusual volume compared to recent bars. These are end of day tools. Breakouts. This is derived from David Elliott's, may rest in peace, mobile breakout tool. It can signal a breakout from chop. And momentum, I combine 2 things. One's called the Kahuna, which is a significant percent B change, and then the Alexander Elder Impulse Indicator, which incorporates volume, time, and I combine those two and I look for significant moves in the direction of the underlying momentum. Incorporates a lot of volume, price, Bollinger Bands, etc. Those are my 4 dots. Why? Because I've been trading a long time, and I think you'll have a hard time finding stocks that are coming out of a base and going into a big move, which are not, without signaling one of these signals. So why not scan for the signals? Squeeze, I didn't make this up. I don't think John Carter did either, although he combined the squeeze with a momentum indicator, which is his TTM squeeze, very widely used. Squeeze is simple. It's when the Bollinger Bands are contracting inside the Keltner channels. It's available on every platform. It's a way to find stocks that are resting, maybe building up energy so that they can spring out of it. Now the problem with the squeeze, it doesn't tell you if it's going up or if it's going down. It just tells you it's going to move. I like things that are starting to move. Coming out of a squeeze is one way to look for. So my tools will work whether you're a breakout trader, a pullback trader, a bottom fisher, a long or a shorter. But I'm going to talk mostly about my favorite trade is pullbacks and uptrends. I want stocks that are in a long, the weekly bongo's been green for a long time. I want to find them when they pull back to support and then buy them when they move off support. So bongo daily has turned red. About here it's going to flip back to green. And if I see kahunas, my momentum dot, my volume dot, gap dot, breakout dots occurring, then it might be something that I might want to look at. So this goes through what I'm expecting to see. Your weekly bongo is green, longer term is up. You recently reversed on the shorter term. Prices near support or a moving average is great. Momentum signal, one of my dots, and then optional If the market is also breaking out, that's a great sign. A squeeze, coming out of a squeeze, more energy. And then I'll look at relative strength breaking above the spider and OBV breaking above its exponential moving average. Those are optional. The more I have, the better, but they don't all have to be there. Other things that I include in my package, one of them is called the high-low oscillator. Ian taught us about the high jump. You look at how far is a stock extended from the 17, the 50, the 200. You come up with a value from this formula. You look back 200 bars, that's how I do it, and then plot the percentage of how you are versus the 200 bars. Turns out there's a low jump, which is the same formula, but you have a negative number. I want to know, compared to the past, am I extended at the most it's been expended? Why? Because stocks reverse at the same level. How do I use this? I might find stocks that are overly extended. I'll combine it with support and resistance, and it allows me to filter stocks. I don't want to buy extended up or down stocks. Or I don't want to short extended down. I don't want to buy extended up. It's designed to work on trending stocks. Stocks trading sideways are not extended, but because they compress their trading range, the high-low jump just doesn't work. It becomes confabulated. But you have to look first. You have to see a stock that's trending to even worry about, is it extended. I mentioned the green candle lows and the red candle highs. You could see them plotted on this chart here. They often are single candle reversal signals. Well, why not look at them combined with a high-low extension oscillator to find periods of time that you're likely to reverse? Here is a stock that had a green candle low at maximum down on the high-low jump, negative, and gave a big bottoming tail. I can't even see what it is. It's so microscopic here. XEXLS must be. But that probably went higher here. That is a super reversal signal. EMS, this is something that I developed years ago when I had to stay home because of non-competes and non-solicits, and I started trading intraday. It's an algorithmic model. It is independent of everything else. I include it. It is supportive, but you can use it independent. It will get you out in and out quicker than my other model will. But like any other model or many other models in CHOP, you have to be careful. It's a great thing to pick up trend. I also have something called the leading moving average model. This is only available in TradingView, and it's another system that helps me find stocks that are starting a new move. You could see down here, oops, I'm sorry about that, that this is the when to get in, out. It will chop you during choppy periods, but it captures really long periods of a trend. The CPR is another system built on another type of a crossover. You get very similar results to the leading MA. I typically plot it as arrows on my chart. And then market breadth tools, we're building this out, and some of this is a work in progress. I'm building them out on both TradeStation and TradingView. I've got some good stuff today. They will improve over time. And then the fundamental, I mentioned that, is in TradingView. Praveen, who will be at the Orange County meeting live to support me and support anybody that has the package. I just love what he's did. We look at multiple quarters of data, earnings per share, what was a year-over-year change? This is Caterpillar. Was it a surprise? Same thing on the revenue, and this is actually, we'll show you the updated picture of this. We include some of the fundamentals on that as well. And then JASRS, well, the picture is sort of covering it up, but the JASRS is very similar to, actually, it's similar in all three platforms. I'm looking at the relative strength of an instrument compared to a market, and I typically use the spider. Why? Because when this market is outperforming as it was here, it trades above the moving average of that ratio and stays above it. When it underperforms, it's trading below. Wouldn't you like to find it when it breaks above? Yeah. So I have on TradingView, for example, I've got daily and weekly on the same chart. And I'll show you how I use those and comparing the different platforms in a few minutes. Apologize, this is going long. As people like to say, I talk too much. Scanners. This is the key. I'm going to go into those. This is why I'm so happy to be part of the WealthCharts family. They created a scanner that's simple, nothing to install, updates automatically for you. You don't have to worry about the lists. And it's just a great tool. And I'm going to show you how I use that. And then the TradeStation is another way of doing the same thing. I do not have it in TradingView. We are looking at it with the new scanner. Praveen's a TradingView genius, but it has not met our requirements. So these are the only two platforms you're going to find the scanners. Why do the scanners matter? Here's my wife that I've been married to for almost 40 years. 2 dates. Here's our granddaughter. I want more time with them. So the scanners will filter setups, scan for stages, find reversals, have the other signals included, cut my time and give me more time for what's important. So, which platform is right for you? WealthCharts, comprehensive package with great feature set, built-in tools of Rob Hoffman, large body of supporting educators, great support staff, web-based and supports all markets, great scanning tools, expanding broker integration, subscription-based. You buy it at Wealth365, you get the best price. Every morning from like 8:30 to 9:15, they have a free market update. Imagine something like what's done on investors.com that you pay for, but you get it free every morning using the platform. You have Ziad who looks at futures. Lori does a lot of options work. Whenever I have time, I just listen in on them. I get a sense of what's going on in the market. It's a great system. Hey, the thing on investors.com is great too. I subscribe to that, but it's an additional fee. This is actually built into the platform. TradeStation, it's a tool that's been available since forever. It's free with an account, but you may have some data fees. Key features are radar screen and scanner. Radar screen allows you to scan signals real time across up to 1,000 instruments. Don't got that in WealthCharts real time. I don't have it in TradingView. Scanner is an end of day tool. And then many programmers and educators support it. Downside is it's scaled back support when it got bought out. It's a 32-bit system. I think they released update 78 for TradeStation 10 this week. If you had to have 78 updates, you've got a problem with your system, and you're constantly fixing it. And that's kind of what I feel with TradeStation. But that radar screen is worth its weight in gold. And then TradingView is also subscription-based, supports numerous markets, low-cost data, improved scanner, but not yet where I need it to be. Great charts, less flexibility on sector industry analysis. So, start to talk now about specific platforms and what I have for you. TradingView, they have different packages. They even have a free package, but I don't think you can save anything. I think you need the premium package if you're going to buy my stuff. Why? Because it gives you the most number of indicators, deeply discounted prices on real-time data. My indicators are linked to your TradingView name, so you can use it on whatever machine you want to use them. And with TradingView, we push updates automatically. There is a quirk to that, which I'll show you, but we push them automatically. The quirk isn't about Praveen and I. It's just with TradingView, once you created a chart, if I update the indicator, your chart won't change until you take the indicator off and reinstall it. Simple to reinstall. And I try and notify people of that during my videos. So, trading packages vary. The JAS Bongo 3 time frames is on every package. On some of the packages, if you put an hourly chart, the top one's going to give you hourly. The next two are weekly or monthly pretty much across the board. My dots are available in every package. The 3 trading systems, the EMS is available in all 3. The leading MA and CPR are just in TradingView. High jump is in all the practices. The market breadth, which is an expanding tool, is available in TradingView and in TradeStation. The relative strength crosses are in, let's see, all the platforms, and the fundamental data is mostly in TradeStation. So let me show you the implementations of my tool set. This is WealthCharts. When you purchase WealthCharts and my package, you'll have the ability to do everything that I'm going to show you. I share with you all my layouts, and it's easy to import, and I do quarterly training sessions to help people. The key in WealthCharts is, well, first of all, just give you a little bit of a platform of some of my favorite pieces. They have a thing called hot stocks, nothing to do with anything I do, okay, with what I've talked with you or my stuff. But if I drop, for example, the S&P 500 in, you're going to see a list of stocks with a flame. And this is going to tell me which are the best stocks that are not the best stocks that have had the biggest move over a short period of time. Now, of course, I'm doing this on a holiday and they do a lot of updates. So end phase is actually one that I like. So why did this trigger? Be triggered because short term it's had a big move. The circle is a free indicator from Rob called a wealth signal. The diamond is called the launch indicator. It does not come with the package. It's his mentoring program. This triangle is my wealth signal. On all my charts, the red is a 200-day simple, the yellow is a 50, the green is a 17-day simple. Here you can see the yellow dots. It's in a squeeze. The fact that it turned green said it left the squeeze. You get 3 bars after it leaves the squeeze that I'm going to track. Notice what's come into this stock over the last week. All my green dots, volume, breakout momentum. The PSAR flipped. Here is the weekly bongo has been green for quite some time. The daily bongo flipped to red and flipped back. That was a buy signal right there. It's not too late. Here's the high-low jump. It tells me I'm at 68%. I'm not extended. Here is my relative strength breaking about OV. Relative strength breaking above its moving average compared to the spider. And here is my on-balance volume over its moving average. So this stock has a lot of the characteristics I like. It's got the flame because it had a recently big move. Take two. Breaking out. Palo Alto is another one I like here. And you could see it had my wealth signal fired. Now, it's potentially ready to buy right here. And these are weekly on the bottom, by the way. But this is my package. Everything here except for the launch indicator and the wealth signal, which comes with everybody's package, is my package. You'll notice these purple circles here. These are the news or upgrades. And this is their earnings indicator. Okay, so if we look at something like NVIDIA, NVDA, and you know what, I do that all the time, and I wonder how could NVIDIA not be there? It's because I flipped the wrong one. Now, if you're wondering why NVIDIA is doing so well, and you know what, you didn't have to, you could, this was a buy point with my tool set back here, 3 green dots, a break above the 17, relative strength at OBV. That was at 550. But what's driving NVIDIA? My goodness. Look at the earnings growth. $6 versus $1. $6 versus $1. That's why this stock's on fire. So these are some of the stocks that are moving. If you look at my tools specifically, well, we'll get there in a second. I talked about my weekly market timing model, and you could see that we're still in a buy. I mentioned that I'll look at a daily model from a short-term perspective, and the only one that we're out of the buy is the diamonds. The other 3 are still in a buy mode. The diamonds flipped. That's concerning. Doesn't mean this is over. It's concerning. It does a great job of, I use ratio charts. Connect to my broker while it's loading. Ratio charts allow me to compare anything to anything else. So what I do for the S&P sectors is I do ratio charts with the spiders, and I look for the things that are breaking out. So technology really has flipped around of recent. And look how weak industrials have become. Look how weak discretionary is. If I go to the stock scanners, this is where I use my tools. My CAT scanner right here allows me to scan for squeeze, dots, how many dots, green candle low, red candle highs, my bongos and how many days they've been in place, high-low jump. This is an extended stock. The high-low jump's 100. Of course it's extended. It's First Solar. Had a great week. All right. And then my EMS signal and how many days since it fired. Ali. This is one that fired on Friday. You could see that there. All right. So what I've done is I've also created the ability to set up scans. So I'm going to create a filter for pullbacks and uptrends. So we're going to call this Web PB in, okay, let me try that. Web pullback and uptrend. So you had to figure out your game. Price. I like stocks that, let's say, greater than or equal to 10 bucks. Greater than or equal to $10. I like volume to be at least 500,000 shares. I like options, so I'm going to just put greater than or equal to 1 for liquidity. That means they have options. I want at least one bullish dot, so greater than or equal to 1. I don't want any bearish dots, so let's go less than or equal to 0. I want the bongo to reverse. That's my pullback. I like to put, I want less than or equal to, I like 9, but play around with it. You'll get, the bigger the number there, the more extended the stock's going to be. And I'll leave the rest of it alone. And then I want my bongo daily to be bullish. I want my bongo weekly to be bullish. I'm going to create that filter. So let's see if I can find that filter. Here it is. So now I'm going to apply it to, say, the Russell 1000, the largest 1,000 stocks in the universe. I'm going to rank it by dots. And how did that get in there if it had a negative dot? See what I did here. Oh, because I didn't save it. Oh, dumb. All right, I have it saved up here. Just pull this up. Okay. So now I'm going to look at my number of dots. Booz Allen. So it had a big move up here. So it had a gap up, which is why it's 4 dots. But I took the dot away here because it closed in the lower part. But that still looks really good. Huge volume, breakout momentum. It had earnings. I could see what the earnings were that it beat. I look at the high-low. It's not extended. I love the relative strength in OBV. Burlington close. Pullback in an uptrend. Clearly an uptrend. Pretty deep pullback. Took out the 50 on massive volume. I like this picture. All 4 dots, relative strength in OBV. This tells me earnings is coming. That might be bad. DuPont Demores. Old name. Nice steady uptrend. Lots of volume the last 2 sessions. I bet there's earnings there. Nope. Let's see. Is it hiding there? Nope. I would have thought there was earnings there. I guess the earnings were back here, and you could see 21% beat. Pretty darn good. All right, 4 dot move. Floor, an infrastructure play. It's going to have to clear, and I guess it probably cleared this area here. I like to draw lines on the charts. Typically, I like to draw them in advance, not after the move has already been done. But here's one that you wanted to see it break out above this consolidation, and it did. With the wealth signal, 3 dots, not extended. Look at relative strength in OBV. So what I just did here with this scanner is I'm able to pull up the stocks that are really doing the best. You can also look for bear retracements. So bear retracements would be looking for the opposite pattern. Centene Corporation. Now, I'm not as good at shorting as I am as going long. First to admit that. In fact, I like to buy contra ETFs rather than short individual stocks. I wouldn't be shorting Centene here because it's got the 200 right below. CRM, this one looks interesting to me from a shorting perspective. It's got 18 points, so about 6 points between the price, 7% between the price and the 200. But I'd rather see it bounce and fail at the 50 like it did here. This is the place to short. Short it here. I'd like to see it retrace into it. Same thing. Would I short it here? It's probably going to bounce here after this kind of a sell-off. But if it runs back up into the 50 and fails, remember the pullbacks and uptrend, retracements and downtrends. So I've built scanners to find these. And if you purchase the package, all I do is have Rob turn it on. You have nothing to install. Let's look at TradeStation. So TradeStation, I got to pull it up. Bear with me. Okay, so TradeStation, I start up with my market weekly. I've got the compact NASDAQ on the left, S&P 1500 on the right. And here I programmed in using the NASDAQ or using the NYSE, the Hindenburg Omen, the Bango, baby, everything is being bought signal. And Bangos are an exuberant market. Bangos, as we're breaking out, are probably good. It means everybody's buying. And when you get up to a top, get nervous when you start seeing Bangos. Then I have Eurekas and Phoenixes, which I talk about at another time. A Eureka moment is a very bullish signal, especially when it occurs at the beginning of a move. A Phoenix is a bearish signal. And then the high-low jump, AD lines, and then I just put in standard RSI and Bollinger Bands. My next is the market timing model, and these are the Hindenburgs with the NYSE, I believe. But basically, I'm looking at the Bongo. This is weekly charts. The WMA, same as I showed you in WealthCharts. My next slide, I look at futures, stock markets, and commodities, and my moving averages, the high-low jump, and my dots. One difference here in TradeStation, the yellow dot is the gap, so I know right away that's the gap. And then above it, the white dot, the sell signal is the EMS, and the buy signal is the blue one. So it's interesting that you had EMS sells on the gold and oil, but if we look at the markets here, let's look at those. We're still in a buy, a new sell on the diamonds, and a new sell on the Russell on the EMS. So I'm incorporating the same basic tools here. And these little dashes here are the Hindenburg Omen signals calculated on the NYSE. Here is the scanner. So let's look at click to import signals. Let's look at the, what do we want to look at? Let's look at the NASDAQ 100. It's an end-of-day scanner. You can run any time, but it's going to use end-of-day data for now. So now it's going to be loading the signals in the scanner, and the scanner was just run. Here is this is an anomaly. I won't even call it a glitch. If the columns are not lining up the way you want them, you just grab it and wiggle it, and they pop into place. So here you have the squeeze. Squeeze release, meaning I just came out of the squeeze. Up dots, down dots. And they have the fifth one because they have the EMS. The EMS signal, the CPR signal, the green candle high, red candle low, daily and weekly bongo, the RSMA cross. I can now scan for the high-low jump, and then a relative strength ranker, which is very similar to what you might see. Let me just adjust this. relative strength, and I want to change that to 40. Similar to what you see in like in Market Smith or others, it's just a measurement of relative strength. So if you see something that's got a relative strength of 99, it better be going up. In CEG, I mean, you've got NRG and CEG, and I think there's a AI story to these that they supply electricity to some of the big consumers in the AI world. Now, you can rank your columns any way you want, but what we did is we built a filter. So price greater than or equal to $5. Make it 10. Bullish dots greater than or equal to 1. Bearish dots less than or equal to 0. Daily bond goes bullish, and it had to switch less than or equal to 9 days ago. Weekly bongo, I want bullish. I like this. I'm going to leave these alone right now. I don't want to make it too tight. And I'm going to save as, just call it web PB, save. Now I'm going to hit OK, and it showed me the one stock that made my criteria in the NASDAQ 100 with a bullish dot, flipped the daily bongo 4 bars ago. And you can see here, here's the daily flipping. Weekly flipped 17 days ago on the relative strength. Now, here's the weekly is 17. The daily one flipped 85 days ago. Is that real? No, it did. It flipped 85 days ago, so way further to the left. So you have all those criteria here. Now, I'm going to let it scan a larger group while we're talking. So let's change it to my weekly consolidated buy list, which I post on YouTube. It's about 1,000 stocks from various buy lists that I have. So in the charting platform, this triangle is my CPR. I use the same moving averages. The blue and the white are the EMS. The rest of the dots are the same. Here is the high-low jump on my charts here with the score. This is the relative strength versus the spider. This is the OBV versus a moving average. Here is a 2 time frame bongo. You can make it, let me try this again. I got a lot of things running. I may have consuming too much memory. Now, how do I do top-down analysis in TradeStation? Yeah, maybe there's an issue with the list. Let's find something. Let's go to the S&P 500. What I do on the top-down side is I've created a basket of ETFs called max ETFs. And sometimes your ETFs go away. And these represent the same ETFs that I'm looking at in WealthCharts when I do my analysis. They represent industry groups, sectors, markets, themes, and what I can look for, and I can rank them by 2-day force. What are the leading things in the market? TAN has been moving out. I found that 5-day force may work better because the 2-day force is so fast. I can rank them by, I've got 2 different ways of doing force. One looks at volume itself, the standard way in Elder's Impulse. Another way is to look at a normalized volume. And so the scores look different because the volume is different. I think this one is probably a better way of looking at it. I could look at relative strength percent change, which ones had the biggest improvement in relative strength. There's TAN. All right. And then I can look at rate of change in a lot of different ways. And so what I've done is I built these ETFs, which include with your purchase. Yeah, I probably have to remember I said there's glitches in TradeStation. I'm not sure why it's doing that. But for example, let's see if TAN is going to glitch on me too, because I don't have time right now to reboot. Well, that's a good sign. So if I look at TAN, there's 20 stocks in TAN. Yeah, I don't know what's going on there. It typically works fine. You saw it work fine on the NASDAQ, and again, I'm not going to reboot it. Let's try it down here. It might be it's just that thing got put in TAN. Okay, so I've got, let's just take that out for now. Bring this up. Here you go, the same thing, the same different columns, and we could look for our filter result and just filter this thing. And what we want to do is we want to open what we used, which was web pullback. Okay, and these are three, and I already showed you end phase is one that I liked. Now I bet you now it's going to run my whole combo list, so let's just do that. All right, let's give it a few seconds. Here's what's new. All right, I still got to boot it up. Here's what's new that people don't see yet. I've now been able to, and you ignore, this is Q. This is not part of my package. But I wanted to be able to monitor a large list of stocks during the market hours. So if I hopefully I remember not to save this, but I'm going to kill this, remove, and I want to remove all of these things. So what I did is I can now monitor intraday in radar screen my dot count and whether you're breaking above the S&P 500 with relative strength, your relative strength of your stock, and then gaps, the Bible gap ups, because do you meet the criteria? Why is this important? Because I know right away who's going to meet potential criteria because they had a gap at the open. And I can rank it by how much they gapped. Then we can watch it the rest of the day and see if they meet the volume criteria to flip a Bible gap up. So the new things here are the radar screen that I just pointed out with the real time, and this should be, well, after my meeting, we'll make sure that everybody's purchased it already. We'll get the radar screen updates. I'm not sure how we're going to do seasonality, if it's going to be an update or a new purchase, probably a new purchase. But we actually have built a app or Van has built an app for seasonality where you could put in whatever symbol list you want and then look at whatever time frames you want, weeks, days, months, years. What are your minimum movements? And then I came up with a way to score it to bring some of the best seasonality tools up to the top. So that's the TradeStation package. TradingView package, pull that up and show you what you start with. You start with charts. So I've got a few things here that are not part of it, so let me turn them off. I like trend lines, and there are some good trend line packages in the market that are free. And I've got one of them in here. Okay, and I think everything else is part of the program. So let me just show you what I've got in this chart. Up here are 3 time frames of bongos. The next is the high-low jump. This is the relative strength. Here is the fundamentals. You can move it all over the place. Notice as we talk, let's put NVIDIA because this is the one to just die for. I think I need to turn it on. Nope, it should be on. Okay, there it is. So you could see, and I messed up my charts. Of course I did. So let's undo that. Okay. You could see the crazy growth rate in earnings have come into NVIDIA. All right. I mean, here it is again, that takeoff day. There's the bar. Here, my trading signals, the dots, the relative strength, which you can't really see as well here, and the OBV, driven, I'm sure, by earnings. So you're going to get the relative strength. You're going to get, actually, check that on relative strength. I will show you where to get the relative strength for free. I'm using somebody else's tool right there. Um, Here is charts with the CPR, the fundamentals. This here is projected seasonality, the highest, the lowest, the average. This here is going to give you 5, 10, 20, and 30-day seasonality winners and losers. Down here, you're going to have the leading and the EMS systems. My dots here, very similar to the wealth charts. And then I've got relative strength versus the spider daily and weekly on the same chart. And then I have the OBV. All these things are part of my package. The one thing that's not is the relative strength, and that is, I'll show you a couple of good ones, as well as the good trend line tools that are available at no cost on the web. So there are some updates that we made. The seasonality is an update. The fundamentals are much different than they were a year ago. I will show you some other tools that we're working on that are allowing us to look at what are the leading sectors and industry groups to give us a sense of what's breaking out. Praveen has spent a lot of time now building for us advanced decline line, up-down volume, high lows. Again, why? Because you get your biggest uptrends when your breadth is with you. And then we have another tool that we've built that incorporates Hindenburgs, Bangos, Eurekas, and Phoenixes. I'm still going to put that in a work in progress because some of the inputs are different from different programs. But we've been working hard. We changed that. Praveen is working hard to come up with new breadth indicators. Here we're plotting NASDAQ stocks above the 200 in white, above the 50 in orange, another tool that gives you great insight into reversals in breadth and divergences. So I've shown you a taste of the different programs. We'll be using them all at the upcoming event. The event is not about selling programs. The event is about making people better traders. Just to give you some insight in the cost. WealthCharts Marketplace. It's $9.97 one-time fee. Contact me. You can't do this on your own because it's only offered for sale during the Wealth 365. I can get it turned on for you in the meantime. You have to have a WealthCharts subscription. They do have the jump start, but I really think as a platform you can't beat WealthCharts. TradeStation, including the radar screen updates, $14.95. We're still working on finalizing the seasonality tool. TradingView, it's $9.97. I'll spend more time showing people the update that includes the internal seasonality enhanced breadth tools. It's gone up in price because of the additional tools. I do a multi-platform discount. So let me give you a clue. If you own the WealthCharts tool and you prove that to me by doing a screenshot of the scanner, I'll give you $300 off on the TradingView or the TradeStation platform, period. I don't go backwards. I don't have any control of the price on the WealthCharts. If you come to my seminar, you'll get another incremental discount. So I will give you, if you come to the seminar and you buy either the TradeStation tools or TradingView, you will get at least the $400, if not back in discounts. So that's where the seminar discounts come in. I know Sagar will be offering his tool set at discounts as well. Why separate packages and payments? I do this part-time. It still works. I've partnered with 3 different entities to develop the tools. Each tool is freestanding, doesn't require the use of any other tools besides the platform that they belong with. Each entity is independent. There's no financial relationship. I offer the discount out of my half. Okay, I can do that. I have no control, as I said, on the WealthCharts package pricing. It's already discounted. If you purchase, we authorize them as quickly as possible. I'll continue to do educational sessions and updates and improvements, and I provide the support at htsidoc@gmail.com. Went a little bit longer than I expected. Hope that gives you a flavor of the tools that I use to trade. And I just want to finish with one thing. So let's go into wealth charts. Let's go into, I've got a long-term charting thing here. And let's look at I mean, as I mentioned in the beginning, which you may or may not have captured, um, I mentioned that I'm taking this drug called Mounjaro for weight loss. If you watch TV, you're hearing all about Mounjaro, Wegovy, Ozempic. They're unbelievable. Okay. They're $1,000 a month and the insurance doesn't always capture it. On one of my videos, I talked about Lilly. All right. Was this the best time to buy Lilly? No. The best time to buy Lilly would have been a much further to the back. But I gave this signal out. Why? Because I had gap with volume and momentum. I already had the breakout. It's not going to fire again. My bongos were green. The relative strength, the OBV. You want to find things early and you want to stay in them as long as you can. SMCI. In December, somebody actually downgraded this stock. And then look at what it did. Okay. Do you know SMCI before it moved? Probably because this thing used to be a $20, $30 stock. But my tools brought my eyes to it. Why? I had 4 dots. I had the reversal on the daily bongo. I had the relative strength in the OBV, and it wasn't overbought. All right. This is NVIDIA. This is SMCI. Time and time again, you're going to get the same pattern. You're going to get drawn to it, and that's how you find stocks. If you agree that that's a good buy signal, then you set the scanner up and your pullbacks and your uptrends, and each night you look at the ones that have 3, 4 dots, and this is how you find these stocks. It's about finding great stocks before they move. Hope you enjoyed this. I don't do these professionally. I do this one take. I don't edit. Flubs happen. I apologize, but hey, as I said, I'm a doctor, which means I'm not a professional videographer. Have a great holiday, and we'll see you soon.